What is good, guys? I haven't done a video in a while, but here I am. I just have a real busy schedule, so it's something that I have to adjust to and try to prioritize into making more videos for you guys. I know there's a lot of you guys who hit me up asking me to make more videos. Uh, Excuse my baby in the background. I don't even know why she's up, honestly, but she's up. Um, but let's get right into it. So let's say we're looking at the 4 hour time frame, right? Like I said, this is something that I want to show you guys because I feel like a lot of you are having trouble with. I do have a lot of people asking me these questions, so I just might as well make a video for you guys. Um, so going back to what I was saying, let's say that this is the 4 hour time frame. So when it comes to higher time frames, you want to make sure you know where the market is going, what is going on. Is it creating an uptrend, or is it creating a downtrend? Obviously, right? Or it can even be consolidating, which is totally fine. Um, but like I said, you want to make sure you know where exactly the market is going, because this is going to let you know what to basically look for, what to expect when it comes to the market. So looking at the 4 hour time frame, obviously, in order for the market to continue doing the not accumulation, to continue in a consolidation, it has to respect this previous area always, right? This area has to be, this has to respect this high, and then this high has to respect this previous high, obviously, right? Same with when it comes to the lows, this low has to respect this area in order for the market to continue going into consolidation. But like as you guys can see, these yellow areas are the areas that we want to get mostly into, because these are our big money moves. Obviously, you don't have to uh, get into every single trade. As long as you can get into these are the moves that you want to get into, from this high to this low. As you guys can see, it's around 1,500 pips. Obviously, it's a lot different when you're looking at it from the market. On the actual charts. So from this high to this low, around 1,500 pips. It all depends on what time frame you're looking at it from. But I feel like the most important thing is obviously waiting for the market to respect that area, but also waiting for extra evidence. So just because it came and distributed in that area, obviously for your smart money traders, distribution meaning it respected that area, getting ready to sell off. Accumulation respected this area, getting ready to buy off buys. But like I was saying, obviously it distributed off of this area, but that's not the trade that you want to get into. Obviously, you want to go into smaller time frames, because let's say stop loss is up here, you get into the trade somewhere down here. May not look like a lot, but the stop loss may be like around 300 pips. That's not what you want, obviously, right? Um, so, like I said, you want to wait for extra evidence, meaning if the market is accumulating or distributing, you want to wait for the market to come in and either redistribute or reaccumulate. Why? Because these are the entries that you guys want to take in order for you to get into either a sniper entry or little to no stop loss, meaning obviously you shorten that 200, 300 pip stop loss into maybe like 10 pip stop loss, going into a smaller time frame. Obviously, for the guys who, people who have been following me, I get into these 1 minute trades because of the amount of stop loss. Even in the smaller time frames, I still manage to get into like 20 pip stop loss, sometimes 30. I don't like to get into these trades. I actually like to get into trades where my stop loss is little to like maybe 9, 10 pip stop loss. But like I was saying, you want to look at it that way. Always go to higher time frames, find out what's going on. Um, Creating highs, lows, highs, lows, highs, and lows, right? So hopefully that made sense. So I want to go ahead and actually show you guys in the charts. So we're going to go down to this area down here, obviously 4-hour time frame, into this area down here. So let's go on the smaller time frame. So wait, let me go back. So as you guys can see, if you go back in time, market actually played off of this low down here. So it accumulated off of that area, which is totally fine. I'm sure in that space, I'm not going to tap all the way into it, but there was an imbalance or a point of interest that I was looking for the market to accumulate off of. And as you guys can see, it did accumulate, but that's not the entry that I wanted to take. So going into a smaller time frame, what did I do? As you guys can see, I identified what was going on in the market. So what's going on? Low, high, low, high, low, another high. And then I believe I got into the market somewhere around here. So let me go ahead and actually show you guys. So now that we identified what was going on in the market, obviously this was not there during that time. I went into a smaller time frame. Keep in mind, you want to keep in mind that that higher time frame is creating these highs and lows in the higher time frame. So right now we're in that most current low. So what are we going to look for? Obviously, I executed off for 1 minute so you guys can see what is going on. Let me go back to the New York Open. Right there. So what is going on? Market is coming down in a downtrend from that high that you saw at that 15-minute. So what I was looking for was highs and lows to be created. You see a low, a high, a low, a high, and a low. So what was I expecting? I was expecting this high up here to break structure. So after it broke structure, as you guys can see, that breaker structure happened right there. And where did I play off of? I went 786 off of here into that most recent high. And as you guys can see, I got into that buy opportunity right there. Obviously stop loss at this low, 48 pips, but it made sense to where I was going. Obviously, if you wanted to do your first target, could have been at this high up here, 286 pips, but we were looking at higher time frames, like I was telling you guys. So going from there to this high up here, what could have been your second target, obviously 289 pips on US 30. That's a lot. Going back down to a smaller time frame. As you guys can see, literally right where it literally took off. Hit that TP, came in, gave you another re-entry. And then what ended up happening again, market just continued to run. We can go to a higher time frame so you guys can see how much the market moved. Market never leaves without you. So if you miss that first entry, you always can get into that second entry, obviously. But obviously we know where market is right now and why exactly it is that I took that trade. So as you guys saw, I went from a higher time frame. I identified where the market was going, where it respected. So I went into a smaller time frame, 15-minute. I identified highs and lows in that area, in that time frame, and then I went into another smaller time frame, the 1 minute, and I identified the exact same thing wherever it is. I hate that it does that, but I went into another time frame, and I identified the highs and lows being created in that spot. So after that, that's what gave me my perfect entry. I turned a bigger stop loss, maybe around a 300 pip stop loss, into a 48 pip stop loss. And that's the trade that you want to get into. So hopefully that made sense. I want to go ahead and show you guys GBP USD. I don't trade this. I just recently started marking this up, but I'm gonna show you a good example of why you wanna pay attention to structure, pay attention to what's going on. Obviously, 4-hour time frame, we're in a downtrend. Low, high, low, high. We're anticipating a low to happen, but market during that time was around this area. So we went down 15-minute, as you guys can see, is creating a downtrend still. Low, high, low, high, low, high. A lot of people, and this is why I tell you, you want to wait for evidence. A lot of people in the 15-minute would have gotten in here. But as you guys can see, market never accumulated. It came into your area that you were anticipating the market to go up, but it never accumulated. And if it never accumulated, it was never going to reaccumulate. So if you would have just been based off this area here and bought, obviously you would have gotten clapped. So always wait for that extra evidence in a smaller time frame for you to actually take these trades that you need to take. Obviously, like I said, I don't trade GBP USD like that, but it is in an area that I'm anticipating the market to continue to possibly go up from, because like I said, came and created a low. So we're going to see if it respects this area and it accumulates, so we can get into the reaccumulation to possibly chase it all the way up to a new high. Not a new high, but obviously create another high. But other than that, hopefully this video made sense, because this is what really helped me get into these trades that I needed to get into. For those of you who watch US 30, this is what I'm waiting for. Obviously, market broke structure in a higher time frame. So I'm looking for this imbalance IPA to get filled. Obviously, broke structure. So now you have a lot of internal liquidity that needs to be captured. As you can see, this is at the open today, Sunday. As you guys can see, it did take out some of that liquidity down there, that internal liquidity. So I see the market doing this. Going back to what I went over just now in the video, I want the market to come accumulate. Obviously, it's going to create highs and lows, highs and lows. Once it breaks that structure in a smaller time frame, after that break of structure, then I want to get into that re-accumulation. And I mean, who knows what's next for US 30. It looks like, I mean, a low, high, low, possibly comes out and creates another high up here. With all the news going on, you never know, but this is a perfect opportunity to get into that buy and possibly chase it up to a brand new high. I mean, if you get into that and it goes up to that new high, that's a 3,000 pip move. That's the trade that you want to get into when it comes to trading US 30, obviously. So that's pretty much it for me, guys. Hopefully this video helped you out a lot. Because like I said, this is what took me to the next level in trading. Other than that, thank you guys for watching. If you're in my chat, the Forex traders chat, I mean, you guys know that we talk about trading 24/7 in there. So if you have any questions about the video that you watched, let me know. If you're a subscriber from YouTube and you want to actually watch these videos and interact with me, follow my Instagram at rudygarcia.98. And I actually have my Telegram in my bio, so you guys can join. But I'll talk to you guys later. Peace.